it's also, in my mind, it's actually factoring a lot more the uncertainty of the future. So the fear of the unknown, the uncertainty of the future is kind of getting built into the markets today.
Financial markets, they say, always move ahead, and then, I mean, it kind of sort of tells you what's coming. Do you believe that's what's happening here? And because markets look pretty bad and they seem to be pricing in.
Yeah, so I don't know whether they're exactly saying what's happening, but they're definitely saying that, probably nobody knows what's happening. And that uncertainty itself just adds to the fear. Yeah.
How they're looking to you? I mean, the rupee, for example, got to 68, but I think the forecast, consensus forecasts were around the 68 odd level by the end of the year. So we're right there now. You think we find ourselves in a okay-ish position, at least macro-wise?
Yes, I think when we look at the rest of the world here, India, in terms of macroeconomic trends, is appearing as a much better sweet spot, because we have built the strong forex reserves. Our import covers are very good. The rupee has been, while we may not like 68 or whatever, but it's been much more stable compared to the rest of the currencies in the world. And current account deficit is still between 1.5. Inflation coming under control. So I think macroeconomic indicators wise, India is looking very good compared to the rest of the world.
And you think if there's flight of capital out, we are in a good position, especially the central bank is in a good position to kind of sort of, it's unlikely we'll see a repeat of late 2013. Let me put it that way. Would you agree with that?
I would think so, because the only thing I would say is that, sharp flights either in or out are never good. I mean, they do create those immediate term impacts. But India is in a much better placed position today than it was in 2008 to bear these external shocks.
I just want to come to the banking system, ma'am. A lot of conversation around that, but what's really happening? And I think I'm referring to the NPL issue as far as Indian banks are concerned, both public sector and private sector. Private sector, of course, with a large corporate exposure. I just want your thoughts. I mean, what's happening? What's moving? What's the conversation like?
So I think, first of all, we must recognize that the worry about stressed assets, again, is not on the entire banking sector assets as such. First of all, the retail part of the business continues to do very well, even in terms of asset quality. The small and the medium enterprises, again, in pockets may have some stress, but the rest of them are doing okay. So the issue really is in certain sectors of the economy or certain companies. Now let's understand the issue behind it. I mean, these companies have built capacities at the time when India was growing at 9% and was expected to continue to grow at 9%. From there, the growth fell to 5, 4.5, 5, and then picking up now. The second is that there have been delays in implementation of the projects. The third is all this has got coupled with global demands being down, commodity prices being down, so that impacts the core industries and so on.
That those projects, I mean, even till last year were looking viable at some point in the future, maybe not anymore.
The cash flows, look much less now. So all this means that the cash flows which were expected from these projects are either now much lower or are coming with a much more delay. And the debts have been taken already. So it does impact the debt servicing capability in some of these projects, in some of these sectors and so on. Now, the banks are not sitting quietly over it. The banks have been working with the promoters since some time now to either get them to sell some core assets or some non-core assets and so on. And I think our approach has been to find solutions in a firm manner, but again, not in a destructive manner. I mean, we have to remember again at these times, there are more sellers than buyers. It does not happen so easily, even if the intent is correct. So I think we are all working with the promoters to find those solutions. Of course, those who would not work with us to find reasonable solutions, we would use other routes, like the legal route. But I think the purpose is to maintain the value in these assets and to find a solution gradually. So we have to give it time. And in the meanwhile, whatever RBI is saying, I think all that only strengthens our hands. So I think in that sense, I would say the RBI, the banks, and in general, even the promoters are all moving together to find solutions.
But if you look at it, the proportion of stressed assets as a percent of the total banking sort of system-wide assets, that is only expected to go higher. I mean, this year compared to last year, and next year higher compared to this year. So it obviously is a legacy issue. It's from the past. It's not essentially fresh creation of stressed assets. These assets were created in the past and are now being rendered unviable. But what's the solution really? Do we need a big out-of-the-box kind of solution? Is it possible?
See, first of all, also we must remember that the banks are a reflection of the real economy. So obviously, the solutions also, growth should also provide some amount of solution. So if the commodity prices remain where they are, then, we are in a different situation. If the commodity prices worsen from where we are, then we are going to be in a different situation. If they improve from where we are, then we are going to be in a different situation. So I think we have to, watch how the economy moves and in general how the economic environment moves. And, the pace of solutions or the creation of stressed assets would depend on that.
From an investor point of view, what would you like to tell investors who are watching this in terms of recognition and proactively kind of dealing with these stressed assets? Nobody, for example, prices have been sort of beaten down to very, very low levels, both private sector and public sector banks, but public more than private. Nobody doubts, for example, the retail franchise, the footprint of something like an ICICI Bank. But the problem is certain large, chronically stressed corporate sort of exposures are hurting the bank. Not just yours, but others as well.
Yeah, see, first of all, I think we are all in a period where we are declaring our results. So I would not want to say anything that is towards the investors or the markets or anything. But I think I said what I had to, that, we have to recognize why these issues are occurring. And we have to make sure that we work to find solutions. And as I said, we should find them in a non-value destructive manner. And that's what we are doing. And that's why I think all the promoters who are sitting with us working out solutions, we are working out solutions with them. Those who may not work out solutions, we will have other routes to follow. But, I have never in the history of India really seen even the corporate sector willing to sell assets, which they are willing to this time. So I think let's just hope.
It's a bad time. There's a lack of buyers.
We have to ride this with the pace of the economy. We cannot do it faster. We should not do it slower. And we have to do it the right way.
You said the bank system is a function of the real economy. Just want your thoughts on the real economy. Many have said that, well, for economy which is growing at 7.5%, it lacks a certain spring in the step. How would you kind of sort of respond to that?
See, I think, one is that, as I said, on the retail side, if you look at banking credit, we are still seeing healthy growth. People are still buying homes, people are still buying cars, so that's one part. The second is, we've seen, for example, coal production go up, iron ore production go up. So that's also creating movement in CVs and demand for CVs and so on. Then, we have seen now that even the orders that are being given out by railways, and a large amount, about 11,000 crores have been given out, that is actually now generating some business for the small and medium enterprises, especially those who are in those niche areas and have those capabilities. So I think, the spring, as you said, will now come from the government spends, which started in highways, now going to start in railways, and next should be defense, and that should bring the multiplier impact on the economy. We have to recognize that private sector investment will come only later, once these current debt levels and leverage levels get sorted out. But as I said, these are few sectors, few companies. We have to kind of look at how the spring comes back and is coming back indeed in some of the other sectors.
Into my next question, which is government spending. The budget is around the corner, and Mr. Jaitley here at the NDTV session sounded very open to the idea of spending more. Do you think that is the need of the hour? And even if that means that we don't contract the fiscal deficit as said earlier, that is okay?
Yeah, I think, government spending is definitely the need of the hour. We need to create infrastructure, we need to spend, and I think this is in that sense the right time to spend. And we again, as I said, given the way the commodity prices are and so on and so forth, we have to recognize that the government spending will right now have to fill in the gap of the private sector spending, which will only come a little bit later.
You think that's way off? A year, 2 years, private sector is starting to spend again? Or
no, again, I don't think we can put numbers here. It will depend on how the commodity prices move, how some of these sales happen. So I think there are a lot of moving parts. We can only say that they're all in the right directions of working towards finding solutions. So let's see how.
Thank you very much, ma'am. It's always a pleasure.
Thank you.
Appreciate it. Thank you.
2 minutes.
Ma'am, can I ask you a question?